Hey, it's Monday. Let's go. I meant to do this video last week, but I might as well do it now. Sorry about the sun. A friend of mine and I were talking about buying a car, and they've always gone the inexpensive route, but now they're looking to buy a car. He's more established and doing very well for himself. But he was just picking my brain and asking me my opinion. Our other friend was there too, who is a salesman who sells power supply, and he was talking to our mutual friend who's trying to purchase the car about the back end of the business, which is actually good information to have, but it's a little in depth. So I'm going to focus on the front end of the business for you, should you choose to buy a car on payment. So there's going to be a lot that I'm going to go over, but bear with me. So I sold cars I started selling cars in, I think, late 2008, I think October or November. So right at the end of the financial crisis. My very first Monday morning meeting was kind of insane because the manager was just going nuts. But because we weren't selling any cars, people couldn't get credit. There's very few cash buyers. So it wasn't a great time to start selling cars, but it was a valuable time because it taught me a lot. Anyways, I sold cars from 2008 to 2011 roughly. While there, I learned a little bit about the financing industry, but now I'm by no means a financing whiz kid or whatever the case may be. I don't really have a lot of knowledge in that aspect of it. What I'm going to tell you is very basic, and the whole purpose of it is so you can have an understanding for yourself, a modicum of understanding for yourself that will help you better negotiate the payment that you're going to be at monthly, as well as help you understand, at least when I was selling cars, how financing works. So back in 2008 to 2011, when I was selling cars, something that was a very easy way for me to sell a car to a customer was if they asked me, hey, what would this payment be roughly? I could say, well, your payment's going to be roughly $300. And the reason why I could do that was because on a $15,000 car, you generally, depending on the credit, obviously this is no money down, but you generally are paying about $20 for every $1,000 you borrow on a car. Now, I want to clarify, this is how it was when I was selling cars. So this is what was going on now over 10 years ago now. So that's when I finished, and then 13 years before that, but when I started. But generally you're paying about $20 for every $1,000 you borrow. Now that is dependent upon your credit. Maybe it's 25, maybe if your credit's really good, it can be 15, I don't know. But for you, just to again have a modicum of understanding, $20 for every $1,000 you borrow is a great way for you to go into purchasing a car, because again, it gives you some understanding about how the bank is going to buy you. So real quick, when you go to a car lot, you find the car you like, you fill out a credit app, you've negotiated a payment or price or whatever, and I'm going to get into that too. Negotiating payment and negotiating price are two wildly different things. But what happens is that the car lot will actually pitch you to multiple lenders. And the reason why they do that is because they want to find the best lender suited, not necessarily for you, but for them to up the rate. Let's say you go in and you don't really know what your rate is and you qualify for a 3.5% rate. Well, let's say that, someone gives you 3%. They can bump it 0.5%, maybe 1%. And that 0.5% and or percent that they bump it to, that if you sign the contract, that goes directly to them, while the contractual rate that you got from the bank goes directly to the lender. That's a little bit of back end stuff, and I'm going to tell you how to avoid that too. But right now, focusing on payment. $20 for every $1,000 you borrow. So if you're looking at a $14,999, that's a $15,000 car. You're going to pay roughly $300 a month. It's probably between $290 to $330 a month is what you're going to be paying. It's important to know that, because you can go into it and say, hey, if I pay $20 for every $1,000 I borrow, I can look at a $15,000 car and I can say, hey, I really want to be at $250, because I know in my brain paying paying $20 for every 1,000 you borrow, $250 represents effectively a $2,500 discount on that car. So I'm not purchasing the car at $14,999 or $15,000. I'm actually purchasing it at $12,500. That's important because price and payment are wildly different. In the car business, payment shields growth. I sold a lot of cars where people test drove a car and they said, hey, if you can get me to $250 a month, I'm a buyer today. Well, the car was basically at $12,500 or it was at $15,000. And I would ask, do you have any money down? Actually, we do. We have $3,000 down. Okay, great. If I can get you at $250 today, you'll buy? Sure will. Their money down that they paid lowered the amount that they were financing, allowing me to not take any money off the car and get them to their payment where they could financially handle it, and I made the most money that I could. Now, there's nothing wrong with that, and in fact, the easiest way to buy a car is go in and purchase it for the price they're asking. There's no uncomfortable negotiation. There's no strange emotions. You just get to do what you want to do. You get to go buy the car at the price they tell you. Everyone's happy. Most of you don't want to do that, hence the purpose of this video. So, if you know that you pay $20 for every 1,000 you borrow, and there's a $15,000 car, let's say there's a $20,000 car. $20,000 car, you're paying roughly $400 a month. Now, that's on a 5 to 6 year loan. That's important. On a 3-year loan, I'm not so sure. So this is between 5 to 6 years, 60 months or 72 months. I forgot to say that. That's important. Anyways, you're looking at a $20,000 car, you know roughly on a 5 to 6 year loan, you're going to be paying $400 a month. You can go into and say, hey, I need $350 a month. Again, the reason why you're doing that is because you know you're actually asking for a $2,500 roughly discount off of the price of the car. Now, again, this isn't ultra specific. This isn't mathematically to the decimal correct, but again, it helps you understand where you're at in the purchasing and negotiating process so you can buy the car, taking a word from one side of the political aisle, you could buy a car at a more equitable rate for yourself, okay? So, price and payment are two different things, okay? I actually encourage people to purchase on payment. I lost deals before when we sold the car to an individual via payment. The bank was willing to buy that customer at that payment, at that rate, at that term. They then said, well, what's the price? I said, well, the price is sticker. I didn't lie as a car salesman. I found I made more money if I just told the truth. Well, they said, well, we want a discount. I said, well, if we do that, we got to start the deal over. They said, we want to do it. Start the deal over. We did. They now wanted to purchase on payment. They now wanted to purchase on price. And for some reason, I don't know why, they couldn't get the car. And I still to this day don't understand. I don't know if it was back in black magic on the part of the car lot that was stonewalling them, or if the banks were like, no, we don't like those terms that they want to be at. It's either our terms or nothing at all. So I think it is better to buy a car on payment as long as, again, you understand that principle. You pay about $20 for every 1,000 you borrow. That's important because, again, on a $20,000 car, $400 a month, you can say I need to be at $350, and you know $350 for you means monthly payment, 5 to 6 year loan, but for them, you also know you're saying, hey, I want $2,500 off without asking for $2,500 off. That's really important, okay? Now, before you get to that, again, $20 for every 1,000 you borrow. It's a simple rule that was true when I was selling cars. I believe it's still accurate. I honestly don't know. But again, that's for, buying a used car and or a new car with 1.9% financing, whatever the case may be. 0% financing, I think, is different. I'm not entirely sure. But it's important, before you go buy a car, you need to go to your lender, your credit union, your bank, whatever the case may be, and you need to get your credit pulled, and you need them to tell you what you qualify for with your debt-to-income ratio. That's a whole other video. Debt-to-income ratio, what year and mile you can qualify for with the terms. So 3 to 5 to 6 year loan. They'll also give you your credit score, and they'll also tell you qualify for this rate. That's important because going in and knowing the $20 for every 1,000 you borrow, general rule, it's not ultra specific. That's a generally accurate statement. Going in and knowing you're going to pay $20 for every $1,000 you borrow, but you also know, hey, I should be at 3.5%. When you go back to the finance office and they try to give you a contract for 5%, you can say, whoa, 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 whoa. My lender told me I need to be at 3.5%. I want 3.5%, or you need to find me a better deal or I'm out. That gives you positioning power. That gives you bargaining power to say, hey, I know what my credit score is. I know what the rate that I should qualify for on this car, roughly speaking, that my lender told me either go with my lender or find me something better or I'm not buying the car. That's really important to understand that. Before you go buy a car, go get pre-approved with your lender, just so you know your credit score and just so you know what rate or range of rates you should qualify for. Because again, excuse me, the car lot has a right to back up or to jack up rates. They have a right to do that. It's not great, but they have a right. They can mark up the rate too within a certain degree. If you don't want to pay more, what you should do is say, hey, I don't want to pay more. I want the rate that my lender showed me I qualified for or better. That's really important. So again, real quick video, wanted to talk about buying a car. It's a little off topic from normal, but I think it's valuable. Again, general rule, you pay about $20 for every $1,000 you borrow. Again, that's not super specific to the decimal, whatever. It helps you understand where you're at in the buying situation and understand, just do real quick math. $20,000 car, $400 a month. By you asking for a $350 a month payment, you are asking for roughly a $2,500 discount. Just understand that. So on top of that, go get pre-approved with your lender. Get the rate that you qualify for before you even get to the car lot so that you don't get your rate jacked up and so that you are in a better position to negotiate a more equitable deal for yourself in buying a car. If you've liked the content, like, share, subscribe. If you've hated it, send it to someone you hate.